Chris, welcome to Silver Star. You and I got to know each other in Maryland when we were having a trial up there, and we have periodically updated our stockholders to the outstanding results up there. Judge seemed to lean pretty strongly in our favor, and as a result of that, we're really doubling down with respect to the pivot, and that's the self-storage strategy. And I'd like for you to give us your background. I'll ask you a few questions, and then just let's dive in and talk about self-storage. So first, Chris, tell me about Chris Sonne.
Well, thank you, Mr. Haddock. It's great to be with you today. And well, I love self-storage. I was a commercial and industrial real estate appraiser starting off in 1984. And I started to specialize in self-storage in the late 90s when I saw the tremendous returns of the sector. It was an emerging sector, just started to be traded publicly. Wall Street took a lot of interest. The CMBS market emerged, and they were large lenders for storage. So the institutional market started to get interested in it. So I really focused on self-storage, started a company called Self Storage Economics in 1998 in Southern California. We're a regional firm. And that firm was acquired by Cushman & Wakefield out of New York in 2006. And I was charged with creating a national appraisal practice. So I'm now at Newmark. We're a global real estate services firm, and I work on the valuation advisory side. We have a team of 30 people throughout the U.S. We do about 1,000 single asset self-storage appraisals throughout the United States and do about $3 billion in quarterly analytics for institutional funds. I have been published over 100 times on things like investor surveys in this sector, expense guidebooks, market trends, written 2 books regarding self-storage economics and appraisal, and have spoken throughout the country at various self-storage conferences, including throughout the United States, in Canada, Japan, and England.
Very good. And you and I have talked about some of these details. I've incorporated them in the Silver Star strategy. So I'd like for you to shift pretty quickly into what part of your background gives you the real strong ability to evaluate self-storage in Texas, Florida, and across the southern United States, if you will, and help companies like Silver Star tailor a strategy that you think is most adaptable, most resilient, and provide the most potential growth opportunities going forward, if you would.
Sure. Well, I think, for one, we look at the supply and demand metrics in great detail of trade areas, which is unique to self-storage from other sectors. Someone might ask me how's self-storage doing in Miami, and there is data for that. But what happens in one trade area to another can vary vastly within any large city or metro area. So, picking the right supply and demand metrics for a specific facility can greatly determine your yield. Now, and we've been doing that for over 25 years, and collecting data to support our econometric models. And that's the basis of a lot of our decisions as to where it goes. And I've been an owner of self-storage. I got together with a couple of folks, and we bought 31 assets, and including in Texas. And we recently exited that a couple of years ago. But, I understand from, putting my money where my mouth is and how this works for storage. But I'd like to say,
Chris, I'm my best not to interrupt you going through here because you're doing such an outstanding job. But, just based on the fact that you're an owner, I'm almost tempted to ask you if you would help me and you would buy Silver Star. But I'm not going to do that because I couldn't legally do that now. So I'm not going to do that. But you and I may have a private conversation somewhere as we go forward. Now, I apologize for that interruption, but I'd like for you, if you could, pick up where you were headed.
Sure. Happy to talk shop on self-storage. You know, Mr. Haddock, when I look at self-storage compared to the other sectors of commercial real estate, the data speaks for itself. I mean, if you look at the NAREIT, you know, this is based on the publicly traded companies. So it's only maybe a portion of the equation, realizing that there's a lot of privately owned real estate. But okay, it's a great metric and it's got a huge market exposure, lots of people looking at the performance of these sectors. Over the last 25 years, according to the NAREIT returns by property sector, self-storage, the total yield, that's cash on cash or dividends and appreciation, the yield has been 17.63%. Now, that's a really good return for any investment, but the next highest performing sector was industrial at 13.22. This is over 25 years, followed by retail apartments at 13.49 and retail 12.26. Office, with all those numbers of the other sectors, 25-year 8.59. So if you drill down a little bit, self-storage in the last 5 years, fairly volatile market conditions, 16.72%. Office, negative 2.11. I mean, that's just publicly traded data, and it really tells the story. Alternatively, you can look at loan losses from the CMBS market because it's publicly available, and office leads in loan losses in CMBS market. Loan losses are generally 4 to 5% on CMBS loans for total commercial real estate in the last, 3 years. Office leads self-storage less than 1%, almost unmeasurable. I haven't done a self-storage foreclosure appraisal in several years. So with as many as we do throughout the country. So these metrics tell you about the strong cash flow characteristics of the sector, its resiliency to turbulent times. I did a 20-year analysis of major events and how self-storage pricing went on the publicly traded REITs. And self-storage generally after things like 9/11 or COVID or the GFC or even the recent tariffs, self-storage, when it declined, was less than other sectors. And so it was more stable. If you look at things like standard deviations on the returns I mentioned, it's also more stable. So it's less elastic, less up and downs, slow and steady. It's, you know, as people like to say, it's not a sexy asset class. It's, you know, it's not much to look at often unless you like making money.
You know, that's very good. I've had people ask me, Gerald, you built with Richard Rainwater Crescent office towers in Dallas, Woodlands in Houston, Trammell Crow Center, which I negotiated directly with Harlan Crow, and name it, Ray Hunt's building in Dallas, Fountain Place. How in the world did you get into self-storage? And then they follow up and say, after looking at some of the building, Gerald, can you go apply your Crescent style, Ritz-Carlton style of cleanliness, management, etc.? And I said, I'm right on it. And after that, I had my first full townhouse meeting with tenants at one of our properties and started tours with shareholders with respect to those properties, because it is a different class. But our shareholders, just like you and me, like making money. And that's why we're headed in this direction. So I really thank you for that. That's actually very good. Now, what about, you've cited the historical data. What about the opportunity set going forward? I'm not asking you to predict at all. You know, tariffs interrupt everything. It's more internationally related, but tariffs do have an impact on what the Fed does with respect to lowering 10-year treasuries, which could have a roll-down effect on, you know, cap rates up or down, depending on what happens, what the outlook in the market is. So it's difficult to predict in a short-term basis. But if you roll the clock and put more of a macro hat on rather than micro, point to the circumstances going forward that would tend to reliably support what you see has contributed to the excellent performance by storage compared to the lesser performance in all generally real estate sectors, but particularly with respect to commercial office?
Well, self-storage, I mean, looking forward, I would say that, first of all, the supply and demand metrics are strong. New construction for self-storage has declined because costs have risen, right? You know, Mr. Haddock, the cost of steel and other things that have skyrocketed. So
Right.
self-storage new construction projects put on hold. There's not as much threat of new construction. Projects that were once feasible may no longer be because of cost. So the new construction has slowed down, meaning the supply and demand metrics are stronger. I would say in general for a sector, it's at least at equilibrium. And this is while the country continues to grow in population. I think also, exactly as you said, that I think there's a sort of cautious optimism about the sector, in part because of its historic returns, the amount of new capital coming into the sector by institutional investors. We call them crossover investors, people that maybe were in office or were in apartments, are saying, I really like working with self-storage, and let's face it, dealing with a lot of stuff that people store is easier than dealing with actual people or tenants. You know, I mean, it's all fee simple. These contracts they're not leases. They're 30-day contracts. You can raise rents when you wish, and if they don't pay, then you can auction their stuff, you know, which is big motivation. And remember that part of the reason people complain that we have too much junk or whatever, and maybe that's part of it, but a lot of it really is driven by emotional memories. You know, what are people going to do with? I've looked at a lot of self-storage units, and you know, in many states, and people, what are you going to do with grandma's plates? You know, I myself have my grandmother's piano, and although I don't play, I'm not going to be the one in the chain of posterity that sells that piano.
I guarantee you I did that. Right.
So,
and
there's a lot of these.
Actually, it's fun to do. It appears to be, for me, it was difficult, but after getting into it, I actually learned a lot about myself.
Is that right?
And that's important. It's just fun.
That's great. So I think there's a general optimism about the sector going forward, given the supply and demand fundamentals. I think there's a lot of, I would say, market sentiment today is that there will be Fed declines in interest rates, which correlate nicely with self-storage cap rates, suggesting that there is going to be some movement downward in cap rates. In our last 6 quarters of our investor survey we do, cap rates have been fairly stable, bouncing around up or down 5-7 basis points, but fairly stable. And so we think investment rates have room for improvement in this sector to go down, leading to higher yields. And on a relative basis, if you compare self-storage to other sectors, it generally has had higher cap rates in the first place. And as it becomes, it's interesting, the NCREIF index, if you're familiar, National Council of Real Estate Fiduciaries, which aggregates data from private entities. So it's interesting, it's comparable to the public side of the REIT data that's publicly available. And NCREIF, interestingly, had this large fund where institutional investors went in called the Odyssey Fund, but it was separate from the core funds. What's really interesting is they're now in process of moving self-storage from essentially an alternative sector into the core funds, which so many are arguing that self-storage actually is now a core asset, which may bring down lower borrowing rates, which may bring down interest rate or cap rates and investment rates in general as well. So there's a lot of, we just had a brand new REIT, self-storage REIT start off, SmartStop this year, despite the turmoil, the market confidence in that, and they have met or exceeded their strike price on their public offerings. So, there's a lot of, it demonstrates a lot of confidence in the sector. And as you know, Mr. Haddock, confidence is a huge part of real
Absolutely.
estate.
Obviously, I know many of the syndicate members that were in that group and know that company. And it actually was a blockbuster IPO, showing a lot of capital. And you and I understand that capital movement determines not only treasury yields coming down, but also the cap rates coming down and making property grow after hopefully one has had an opportunity to buy in at a higher cap rate at a better investment entry point. But my view is there's an extremely good opportunity for this company, Silver Star, right now. And you and I, neither one can predict with accuracy on this, but I'll make the business judgment, having made the judgment to buy Crescent when everybody else said we couldn't do it, that now's the time to buy self-storage. That's my judgment. Is that reasonable?
I think it is. I think as you see more, the other interesting thing is how, self-storage is still, depending on what data you want to look at, but 2/3 of self-storage is not institutionally owned. It's mom and pops out there that own. Some people own one or two, and some people own 4 or 5, or there's smaller regional companies, 10 or 12, or the company we had that had 31 in 4 states. So the ability to build up a portfolio to aggregate that. I mean, that's how SmartStop got started. They bought their first one,
Right.
20 years ago, and now they go public on a I don't know, how much did they go out for? I don't know.
800 billion, I believe.
$800 million, and that's not all of their portfolios, all of their REITs. So they still have privately traded side. So, it's amazing to me that, there's this aggregation opportunity in self-storage. You get the economies of scale, you get a lower investment rates, higher borrowing power, all the things that you've done in other sectors is now being applied to self-storage. Large institutional capitals coming in. It's a great place to invest in money that has a great return and also is steady and less elastic. And so, that's been recognized. And I think you look at this sector that needs, that could do with more aggregation of facilities, and so many are privately small owned. Tremendous opportunities. I agree with you.
Thank you. This has been fun. I think you've covered this sector this time with respect to the historical features and the outlook as well as it could possibly be done. And I want to thank you for that. And you know
My
what I
pleasure.
look forward to? I look forward to not you're buying some of Silver Star, but my buying some of your organization. So I mean, you have built my confidence. And so I want to thank you for that. And I know you will side by side help us in metrics with respect to what we're buying and valuations where needed going forward. And I really look forward to discussing those further with you.
It's a pleasure, Mr. Haddock. Thank you.
Thank you and have a good day.